Hello everyone. Last night, Accenture released their quarter results. In response, Infosys ADR fell near 3% down. So, what about it? Then, US got the very strong GDP growth number and Indian banking liquidity finally improved. All we are going to discuss in today's market report video for 26th September 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, for the fifth consecutive session, Nifty closed on a negative note. Here, the reason was largely same as in the past few sessions, weakness in IT stocks due to the concerns over Trump's H-1B visa stance. And the new development was regarding the Wall Street Journal article. Here, the article said that at present, US government is scrutinizing the past H-1B visa usage of all big tech firms, including all Indian tech companies and US big tech companies like Amazon and Apple. However, at that time, the loss was limited as market was waiting for the Accenture quarterly results, which now released. Analysts were expecting the earnings per share of $2.98, which is 6.8% higher compared to a year ago. Now, regarding the actual quarterly results, the earnings per share came as $3.03, which means it's 9% higher compared to a year ago. So, the actual results beats the analyst estimation. However, there is another metric called GAAP EPS, which means Generally Accepted Accounting Principles, a standard accounting framework for IT companies. So that diluted EPS for the quarter came as $2.25, which is 15% decrease compared to a year ago. And the Accenture said that the reduction was due to the business optimization cost, which from market perspective very negative. Then regarding future outlook, they said if US government business is impacted because of all the Trump possible reason means, then they expect the full year revenue growth of 2 to 5% in the local currency, which is euro. If no craziness from Trump administration means Accenture giving the guidance that the revenue to grow 3 to 6%. In short, it beats the estimation, but there are potential concerns, so market taking it as negative. Last night in US, Accenture share price decreased near 3%. And as an influence in response to both Wall Street Journal article and Accenture results, which in turn decreased the Indian IT stocks ADR, both Infosys and Wipro by near 3 and 1.5% respectively. Then moving to the banking liquidity update, surprisingly on Wednesday 24th September, which was released yesterday during our market time, the Indian commercial bank liquidity deficit improved to 26,300 crore rupees from 87,000 crore rupees on Tuesday end. So it's improving but not positive, and market will stop worrying about it only if the commercial banks started to have the liquidity surplus of 1 to 2 lakh crore rupees and not certainly during the deficit. Coming to US market, 3 important macros were released last night before their market opening. Q2 final GDP growth rate, August month durable goods order and weekly jobs data, and the surprising thing was all 3 came really very good. For example, the Q1 US GDP actually declined by 0.5%, and for Q2 analysts projected to around 3.3%. But to all surprise, the actual final Q2 GDP grown by 3.8%, which is a very huge number for the advanced economics like US. And it is the strongest growth number since Q3 2023. Then in case of durable goods orders, in the July month over month, it was declined by 2.7%, and for August month, analysts expected to decline by 0.3%. Here too, by the surprise, it haven't declined. On the contrary, it increased by 2.9%. And the weekly new jobs insurance claim came below 15,000 number than what analysts were expecting. So basically, all the macro released last night in response to US economy came very strong, which is good, but it reduced the rate cut hope. So US market closed negative for the third straight session. Dow Jones was decreased by 0.38%, S&P 500 was down by 0.5%, and Nasdaq decreased by 0.5%. In case of VIX, it increased 3.5% and moved to 16.75. In addition, this reduction in rate cut hope also made the gold price to consolidate $3,780 per ounce from $3,790 per ounce. Then regarding oil, the price was steady as yesterday Russia's deputy prime minister said that they are partially banning the diesel export until end of this year due to the Ukrainians' drone attack on Russia's oil plant. So at the time of this video, Brent crude traded near $70 per barrel and WTI crude closed at $65 per barrel. Regarding Indian ADR, as we discussed, both the IT stocks decreased significantly. In addition, both the banks also decreased but less than 1%. Hence, if we calculate the arbitrage, both IT stocks indicating the fresh negative difference of 2% and both the banking ADR having 0.5% negative difference, only Reliance GDR seems flat. However, GIFT Nifty didn't decrease that much. Early morning it was traded at 24,927. So equating that with the spot market, it's indicating 30 to 50 points gap down opening. Anyway, moving to new India related info. Last night, the Indian trade negotiation team who went along with the Commerce Minister Piyush Goyal to US have returned and our minister is returning today. So far, no any concrete information or the press conference is released from either Indian side nor the US side. Rather, they signaled the successfully completion of high-level discussion. Hence, by chance, if any of the team members released any detail means, then that could influence our market. Certainly, there is one thing very clear. It seems India agreed to buy more US oil. And I expect India will agree to buy corn for the ethanol production, not for the food purpose. So, please look out for any potential development. Then second, I don't know the influence. Today, our Prime Minister Modi going to address people, particularly Bihari people at 11 a.m. and scheduled to announce some women's scheme, which Indian government going to deposit money directly in the bank account of 75 lakhs women. Though this seems election-minded action, but this could increase the rural demand and consumption. But as I said, I'm not sure about the influence, but like to convey the news. As a summary, US market closed negative for the third consecutive session and Nifty closed negative for the fifth consecutive session. So global momentum is not in favor of our market. In addition, we got weakness in IT stocks. For the moment, banking stocks also looking negative. But by chance, if the liquidity improves in the today's RBI money market operation report means, then that could support our market. Anyway, for now, both ADRs and GIFT Nifty indicating the gap down opening. Then about institutions, as usual, FI were net sellers. They net sold for near 5,000 crore rupees and DI net bought for 5,100 crore rupees. Moving to participant-wise open interest analysis. Yesterday, again, market was driven by call options, which added about 30% new open interest, whereas new put option open interest only added by 6%. So the PCR ratio dropped to 0.71 from 0.86. Then regarding participant stance on both index future and index option, please pause and have a look. No major change. Overall, retail traders position positive and FIO position was clearly negative, whereas proprietary traders inclined more on the neutral side with negative bias. Then as per stock open interest, Asian Paint, TCS, Trent, TVS Motors, Coforge, Shriram Finance and Power Grid are some of the 87 stocks that got an increased open interest along with a negative close indicating the short build-up. On the other hand, AU Small Finance Bank, Bharti Airtel, Hindalco, ONGC, HAL and SAIL are some of the 18 stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, before our market opening, Japanese September month inflation data is scheduled to release, and during our market time between 12 to 2 p.m, UK GDP, France inflation, Germany's unemployment and Europe's wholesale inflation is due. Finally, in the night, US very important PC inflation for August month are some of the important things we need to keep an eye out today. Coming to technical, Nifty opened 20 points gap down and was under pressure throughout the session, then closed below 24,900 mark. Thus on the daily chart, Nifty formed a long bearish candle with an upper shadow indicating a weak momentum. Nifty has fallen below the crucial support level of 25,050, which also coincides with 38.2% Fibonacci retracement of the previous rise from 24,400 to 25,450. In addition, it maintained the lower high lower low formation for the fifth consecutive session and dropped below the Bollinger Band middle line as well as 20-day and 50-day exponential average. Then furthermore, RSI dropped below the key 50 level with a bearish crossover, while MACD also showed a negative crossover. All these confirming increasing bearish sentiment. As an overall, it appears sellers are dominating the market. Hence, on the downside, immediate support is at 24,800. A break below this level could trigger a deeper and more serious correction. On the upside, immediate resistance is at 25,000. In case of Bank Nifty, it opened 60 points gap down and was range bound throughout the session, then closed below 55,000 mark. Thus, on the daily chart, Bank Nifty also formed a bearish candle with a long upper shadow, indicating selling pressure at higher level. Like Nifty, it also fell below the 38.2% Fibonacci retracement of its recent rally and continued to form lower high lower low formation for the 5th straight session and closed below the 10-day, 20-day and 50-day exponential average. Furthermore, same as Nifty, RSI dropped below 50 and having a negative crossover. Hence, 54,500 to 54,400 zone expect to act as the crucial support, and on the upside, 55,300 to 55,400 zone expect to act as the important hurdle. Regarding the options front, the maximum call option openers was at 25,000 strike, followed by 25,100 and 25,500, with maximum new call option rating at 25,000, 25,100 and 25,050 strike. On the put side, the maximum openers was at 25,000 strike, followed by 24,900 and 24,500, with maximum new put option rating at 24,900, 24,800 and 24,200 strike. Thus, from options data, it indicates that Nifty might find immediate support at 24,800 followed by 24,500 with resistance on the higher side at 25,000 to 25,100. So that's all in this video. Hope you got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.